Hi, myself Dr. Abbas Vatole, Assistant Professor, Amal College of Advanced Studies, Nilambur. This video is an interactive online quiz on basics of derivatives. You will be able to get 16 important multiple choice questions and their answers in this video. Let's start the game. First question. Future trading commenced first on dash. Chicago Board of Trade, Chicago Mercantile Exchange, Chicago Board Options Exchange, London International Financial Futures and Options Exchange. The correct answer is Chicago Board of Trade. The underlying asset for a derivative contract can be equity, commodity, interest rate, all of the above. The correct answer is any of the above. Derivatives first emerged as dash products: speculative, hedging, volatility, risky. Hedging. Who are the participants in the derivatives market? Hedgers, speculators, arbitrators, all of the above. Correct answer is all of the above. OTC derivatives are considered risky because no formal margining system, no formal rules or mechanism, not settled on clearing house, all of the above. Correct answer is all of the above. Nifty includes dash most liquid stocks that are traded on NSE: 30, 50, 100, 500. Correct answer is 50. Impact cost measures the dash: volatility of the stock, liquidity of the stock, return on a stock, none of the above. Correct answer is liquidity of the stock. Index funds are dash managed: actively, passively, family, none of the above. Correct answer passively. Which of the following exchanges was the first to start trading financial futures? Chicago Board of Trade, Chicago Mercantile Exchange, Chicago Board Options Exchange, London International Financial Futures and Options Exchange. Correct answer is Chicago Mercantile Exchange. In options contract, the option lies with the dash: buyer, seller, both, exchange. Correct answer is buyer. The potential returns on a futures position are limited, unlimited, a function of the volatility of the index, none of the above. Correct answer is unlimited. The best buy order for a given futures contract is the order to buy the index at the dash: highest price, average price, lowest price, none of the above. Correct answer is highest price. Margining on the NSE's derivative market is done using dash margining system: EIMS, risk matrix, span, prism. Correct answer is span. The SEBI Act 1992 was an act to provide for the establishment of a board dash To protect the interest of the investors, to promote the development of securities market, to regulate the securities market, all of the above. Correct answer is all of the above. The regulatory framework for the derivatives market in India has been developed by L.C. Gupta Committee, J.R. Verma Committee, A.C. Gupta Committee, none of the above. Correct answer is L.C. Gupta Committee. Which of the following acts governs trading of derivatives in India? Securities Contract Regulation Act 1956, SEBI Act 1992, Capital Issues Control Act 1947, Depositories Act 1956. Correct answer is Securities Contract Regulation Act 1956. Thank you for watching.